Gold's been on a tear lately, hitting all-time highs. But something fishy is going on behind the scenes. China, one of the world's biggest gold buyers, is pulling strings to manipulate the market. I've digging through financial reports and analyzing market data to uncover the truth. What I found will shock you. Why would China want to suppress gold prices after driving them up? How are they doing it? And what does it mean for your investments? Stick around as we unravel this golden mystery and expose China's surprising tactics. To understand China's gold game, we need to look at their economic woes. The Chinese property market, once a gold mine for investors, is crumbling. Prices have plummeted, wiping out billions in wealth. It's not just real estate. The Chinese stock market has lost nearly half its value since 2020. Talk about a double whammy! And it gets worse. The yuan has been sliding against the dollar, making Chinese citizens feel even poorer. With their traditional investments tanking, Chinese investors are desperate for a safe haven. And that's where gold comes in, setting the stage for some serious market manipulation. With their economy in shambles, Chinese investors are turning to gold like never before. It's a perfect storm. Real estate's a bust, stocks are tanking, and their currency's losing value. So what's left? Gold. It's seen as a safe bet in uncertain times. And boy, are times uncertain in China right now. Gold ETFs in China are seeing record inflows. It's like a gold rush. But instead of panning rivers, they're buying up every gold-backed fund they can find. This surge in demand is part of what's been driving gold prices to new highs. But here's the kicker. While everyday Chinese investors are piling into gold, their government is about to pull a fast one. And that's where things get really interesting. Now, let's talk about China's central bank. For months, they've been on a massive gold buying spree. We're talking hundreds of tons of gold added to their reserves. This buying frenzy helped push gold prices to record highs. It seemed like China couldn't get enough of the shiny stuff. But then, suddenly, they slammed on the brakes. The central bank stopped buying gold entirely. This abrupt halt raised eyebrows across the financial world. Why would they stop so suddenly? What changed? Well, buckle up, because the answer to that question is where things get really interesting. So why did China suddenly stop buying gold? The official line is that it got too expensive. But that's not the whole story. Think about it. If you believe in gold's value, why stop buying just because the price went up? No. There's more to this. China's playing a much bigger game. By halting their purchases, they're sending a signal to the market. It's like they're saying, gold's not worth buying at these prices. This creates doubt and can slow down the price increase. But here's the twist. While they're publicly stepping back, there's a good chance they're still buying gold secretly through state-owned companies. It's a classic case of do as I say, not as I do. And this is just the tip of the iceberg when it comes to China's manipulation tactics. Now, here's where China's manipulation gets really clever. They're playing both sides of the market. On one hand, they're letting their citizens buy gold like crazy, driving up demand. On the other, they're publicly stepping back, which can cool prices. But that's not all. China's also been pushing for more yuan-denominated gold trades. This gives them more control over pricing and reduces the dollar's influence. They're even suspected of using the gold lease market to short gold, temporarily pushing prices down. It's a delicate balancing act. They want gold as a hedge against the dollar, but they don't want prices skyrocketing too fast. Why? Because they're still accumulating. By keeping prices somewhat in check, they can buy more gold for less in the long run. It's like they're playing chess while everyone else is playing checkers. So what does all this mean for gold's future? Despite China's manipulation, the long-term outlook for gold remains bullish. Their tactics might slow the rise, but they can't stop it entirely. As long as global economic uncertainties persist, gold will likely continue its upward trend. For investors, this means opportunities, but also risks. It's crucial to stay informed and watch for signs of market manipulation. Speaking of staying informed, if you haven't seen my previous video on central banks' record gold buying, you need to check it out. It dives deep into why the world's biggest financial institutions are hoarding gold like never before. Could they know something we don't? Find out in that video. It's the perfect companion to what we've discussed today and might just change how you view your investment strategy.